It is Monday, March 18, 2024. It's about 10 minutes in front of 9 o'clock a.m. Eastern. And here are the levels in the SPY that we will use to trade against in the E-mini futures today. And these are the exact levels that will be emailed out in a few minutes to the viewers who have requested them to trade with or experiment with while the website and the online trading course are being developed. After the market closes, we will analyze all the trades taken in the E-mini futures based off of these levels. And just to point out, in the pre-market, the spiders got up to 514, pulled away a little bit. So they've been climbing some in the pre-market. But don't forget that from Thursday to Friday, there was a big drop. So there's important areas here, and there's going to be some bouncing around. But as I said, we'll take a look at the trades after the market closes. And just like that, it's after 7:30 p.m. The market closed a few hours ago, and what do we have on the agenda to discuss? Well, it was a good way to start the week. 2 trades at our levels today. Both were by the book and worked as designed. I took one trade and pulled some ES points out of the market, but I canceled the second trade after it was triggered, and I believe there will be a learning opportunity in tonight's video when we discuss that second trade. You can see here on the chart of the entire day here which 2 levels were hit. The first trade was a short trade up at 515. And the second trade was a long trade down at 513.40. Let's expand this chart a little and kind of focus on the relevant areas. So you'll see after 9:45, spiders were in between the 2 levels. They were coming down here. They decided to go up and hit the 515 first. All this was recorded, but just to talk through a little bit of this, there were indications on other charts that today would be a good day to be on the short side. So I rode this one out and actually had a trailer on this one. But when we got down here, I kind of had other ideas, which I'll explain the best I can when we get to it. So right now, let's just take a look at the trades as they were recorded live. So I start to key in orders after 9:45 a.m. You can notice a clock in the lower right-hand side of the screen. They were closer to 515 at the time, so activating a short trade in the E-minis if they hit 515 first was my goal initially. They fell away for a bit, and I'll just scrub ahead here as I'm talking to show you. So I wasn't sure if I should change course, but they came back up into the 515 area. And at some point right there, you'll notice that I adjusted the 515 back up to 515 instead of factoring in the 5-cent buffer. And the reason for this is twofold. One, since they fell away already and were now heading back up, there was an increased chance that the spiders would spike above that calculated level, since they probably had a little bit more steam after the first attempt. I should go ahead and pause this while I'm talking through this. That's mostly an observation that comes from experience. That sort of price behavior just tends to happen more often than not. But the main reason was that I had one of those longer term levels just above this area, and I wanted to get a better price on the short position if they did, in fact, poke their head above the level before beating resistance. So I know it's only 5 cents, but you see they triggered at 515. So once the short position was triggered or was entered, I held on to it even while it was out of the money for a little while. They got above the fumble threshold, and I'll just let this play here for a little bit, but no calls for alarm or to change course per the rules of the strategy. Also knowing what was going on with other time frames and being aware of that other important level right above this area, it was just a good idea to let this one take its time and develop. And there are other reasons that you'll notice that I adjusted my exit to buy back 3 contracts instead of the entire position of 4 contracts. And you'll notice that the base hit profit target was 5 points instead of 4. The plan was to squeeze out or to close out 3 of the total 4 and then trail the remaining 1 contract to see if I could pull more points out if they or when they fell further down. And I think I set the initial trailer to 6 points. And they did fall down as designed. They poked their head above the fumble threshold, but I wasn't worried. Like I said, I was just perfectly fine to be on the short side of this trade today. So I'll scrub ahead and you'll see this trade play out as designed. And once they hit the profit target, that was 5 points. 3 contracts were bought back and started trailing the remaining one. And they kept falling. You'll see them fall down. I pulled it down into the money. Of course, I'm looking at 513.45 now. And so they got closer down to that level. I had an activation to buy 5 contracts at, if they hit 513.45, that way the trailer would be closed out and I'd be long 4 contracts. And I was just planning to grab a base hit down there. I didn't mind being on the short side, like I mentioned earlier, and trail it, but I didn't really want to be give a long position too much leash, so I just planned to grab the 4-point base hit. But you see, they stopped me out on that trailer before they got down to 513.45, and actually I never adjusted the order, so it was still set to buy 5 contracts down there. So the order was triggered when they got down there around 1 p.m. So I'll scrub ahead here, and you'll see them get down there. And getting close to 1. So let me pause this and I'll talk through this a little bit. So here's some learning opportunity. So it got into the money. You see they're triggered 5 contracts long, base hit of 4 points. And I did something that doesn't really jive with my own rules. The rule is essentially this. After a trade is triggered and a base hit of 4 ES points is almost reached, like they come within a tick or two of hitting the profit target, and then they turn around very quickly, return to the entry point, I look for other reasons to call this a near miss and jump out of the trade at a wash, because usually this kind of behavior is indicative of a continuation of the interim trend and not a reversal. So what they did here was not exactly that. They did get within a tick of giving me the base hit of 4 points on the 5 contracts, but they did not immediately fall back to the entry point. It took a little longer than what I need to see for the rule to be invoked. So let's just play this. So you'll see them get close to the 4 points. That's $1,000 with 5 contracts. They came within a tick, but they took some time. They did not immediately fall back to the entry point. And yet, despite all this, I had my finger on the trigger, ready to close out the position if they got back to the 0 line after that little near miss. But it didn't jive with the rules, like I said. I don't know whether it was my feeling that being short was a better play today, and that I had more confidence in seeing bigger drops than seeing a grind higher. But in any case, I jumped out of the trade right when they got back to my entry point. It was like one of those realizations that I just did something I know I'm not supposed to do, breaking one of my own rules. I knew better. All this trade needed was a little bit more time to develop, so all I could do is watch. As price climbed up, and not only that, they did it 2 more times at this level before the day was over. So you'll see this trade just disappear because I closed it right there. And I ended up stopping this recording as they got higher. I'll just let it play because you'll see I'm hovering here at what would have been a base hit, and they hit it. So that would have been it. So I'm kind of kicking myself. And I'll pause this and we'll go back to the full day just to show you that they did this actually 2 more times today. Meaning after this initial bounce, which gave more than a base hit, they did it 1 more time here and then a 3rd time. So I don't like to take trades more than the 2nd time they hit a level, but obviously that level was important, and I just unfortunately let that one get away. On the tracking log, we're showing 2 base hits because that is what you would have pulled out of the market if you were playing by the rules and not making up stuff on the fly. I know that most of you watching these recap videos don't have access to the rules of this strategy yet, but don't worry, they'll be available soon. I'm still building out the trading course, and I want it to be as perfect and as comprehensive as possible before I let it go live. Speaking of, this morning, a number of you received these exact levels via email. If you took trades at these levels and made money, consider leaving a comment under this video about your experience, or if you're just experimenting with the levels and maybe paper trading them. I hope you're getting the hang of trading them and seeing how often that these levels produce solid base hits in the E-minis. I'd appreciate your feedback. But anyway, thanks for watching, liking these videos, and subscribing to the channel. Have a great day.